Hello, I'm Shane Vernier.
Hi, I'm Connor Woods.
And I'm Nick Quinn. We are the analyst team here at howtotrade.com, and together we're going to show you everything that you need to know about trading the rounding top pattern. So let's get started. Rounding top is a classic reversal indicator. It uses the same kind of logic as a head and shoulders, except that in a rounding top, the actual shifting momentum takes a lot longer. It's far more gradual, and momentum within the uptrend that is losing steam happens to roll over a lot slower, and traders will then get a much stronger heads up that the downtrend, the ensuing downtrend, is about to start. So traders will use it to either unwind long positions that they've got in the market, or they'll use it in itself as a gauge, as a way of actually then starting to get short positions into the market for a potential trade to the downside. So let's break down exactly what you need to see in a price chart to identify it properly. A rounding top is a great pattern to trade, but not that obvious and not always that easy to spot, simply because for the majority of your time when you're looking at the structure, you'll probably be in your mind trying to think about a head and shoulders, because this pattern can actually start to display the characteristics of a head and shoulders, but then it fails to fully materialize as a head and shoulders in the traditional sense. Now, you're obviously looking for a bullish structure to move into the pattern, but what you're going to find is that quite quickly the actual shoulder structure, maybe the left shoulder, it doesn't really form quite properly the way that you expect, and the gap between the actual high point of the move and the left shoulder can end up being quite narrow. Then what can happen from there is that the right shoulders, you're trying to think about forming a right shoulder within the pattern, that can actually fail to materialize altogether, and it can go very, very contracted and very subdued at the end. Now, what you're also going to get is you're going to need to map in the support points, the neckline as well, to act as a line in the sand, so that we've got something to trade off if we're trading to the downside. But also you'll find with this type of structure is that the pattern can elongate for quite a long period of time as well. So it can be quite a slow, gradual process as momentum changes, shifts, and moves to the downside. Trading wise, you would be looking to trade it in a similar way to a head and shoulders. You'd be looking for a break of the neckline and then stop placement somewhere above, and you'd be looking for a measured move of the highest point from the top of the rounding top to the neckline as a projected target. But that is the correct way to identify it on a price chart.
Okay, so let's have a look at how we can trade this rounding top pattern. Now, the first thing we want to do is we want to know that it's going to be at the end of an uptrend, and we get that rounding top to then get that trend reversal. So we're looking for a bullish trend first of all, and we can see we've got that here. We can see from low to high, we've got that real strong bullish trend. But if you notice what happens near the end of this bullish trend, we can see that these highs start to get a bit lower in magnitude, and we can see that rounding top really coming into play. And you can see that's really nice and rounded. Now, what we want to do is, if we zoom in a bit closer, we want to wait for a break of a key trend line, key neckline, so we can see that the neckline of this rounding top will be here, and this candle is the one that manages to actually break that. That's where we get the full rounding top. Now, as traders, theoretically, we want to short after we get that candle closure from the break of that neckline with a stop loss above the rounding top pattern. And you can see that if we move this along and we wanted to target, for example, these lows that you see down here, then we move that down, and you can see that this trade would have yielded a fantastic 3.43 risk reward trade, and that's really how we can use the rounded top really strongly in our trading.
Here are a few key pros and cons for the rounding top pattern. First, the pros. The rounding top is easy to identify in the live market. Also, the rounding top occurs frequently in all markets on all time frames, so it's never difficult to find a rounding top pattern to trade. Also, the pattern often precedes considerable bearish trends. Now, on the con side of the ledger, the rounding top can produce false signals in consolidating markets. So when the market flattens out, it can be difficult to trade the rounding top successfully. Also, large heights can make the rounding top expensive to trade, specifically on longer time frames such as your daily, your weekly, or your monthly charts. Lastly, traders can take a while to execute on longer time frame charts. So the longer the time frame chart, the longer you're going to be waiting for the rounding top pattern to set up properly. Now, let's review some of the key takeaways from the rounding top pattern. Number one, The rounding top pattern is a bearish reversal pattern. It occurs during a pronounced uptrend in price action. Number 2, the formation consists of periodic highs and may include a double or triple top pattern. Visually, the rounding top is similar to an inverted parabola. Number 3, to trade the rounding top, a sell entry is placed right below the neckline. The stop loss is located above the most recent periodic high. Profit targets are then set beneath the pattern relative to the pattern's height. And lastly, the rounding top isn't 100% accurate. It is best traded with sound risk management principles. Now, if you want to learn more about the rounding top pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you exactly how to fit rounded tops into your own trading methodologies. We'll also demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain valuable market experience. Then, once you're ready, feel free to join our How to Trade Funded Trader program.